Friends, in this video for ITHOUGHTWEALTH, I am going to talk to you on the topic making sense of the FII selling. For months together, FIIs have been selling Indian equities. The selling has been relentless, and for the past several weeks, the selling significantly exceeds the domestic institutional buying. So, on the one side, you have very strong selling and you don't have matching buying on the other side. Naturally, the markets will show weakness. But now, the weakness threatens to spread to parts of the market where the FIIs are not selling, but domestic investors are selling out of fear. So, slowly, the selling done by FIIs is spreading into other parts of the market, and we could well see a contagion in selling. As an investor, this is not new. We have seen long bouts of bearishness, long phases of sustained selling by one set of investors, and fall in valuations of companies well below their intrinsic value. The lesson which I have learnt as an investor has always been very simple. Stay focused on what investments you aspire to own. Focus strictly on what you want to buy. Be very specific on what you want from the market. Monitor exactly what you want from the market and never fail to get what you want when the market is giving it to you. I know a lot of people who go frozen when the market is giving them what they want on terms which they want. This applies to every one of us. It applies to me in every capacity that I operate in. As a professional investor, as a proprietary investor, as an advisor. It's important to participate when the opportunity is before you. I know a lot of people have been telling you to invest at all times. Sometimes you feel that where is the difference in what is being told to me? In every market context, there are opportunities. As an investor, you should know whether you want to participate in those opportunities. And if you do, you must make sure that you invest when the market is throwing away those assets. Today, the FIIs are clearly throwing away the Indian large caps. So, we are seeing companies trade at valuations which probably may be very interesting to participate in when you are going to look at them in hindsight after 3-4 years. But let me warn you that the journey from here is not going to be easy. The reason is simple. We are going to have global headwinds. When you have global headwinds, that too on the macroeconomic front, sentiment is going to be a casualty and it is not going to revive anytime soon. So you have to prepare for a prolonged phase of bearish sentiment globally. Naturally, we are going to wake up every morning to a fallout of that global sentiment in our market. So, the habit of investors to throw away equities at valuations which probably are attractive to buy is going to grow. As an investor, we should know what we can do to maximize our participation and to get the best out of this irrational phase of investor behavior. But while we try to do this, we must also remember that we cannot catch the bottom and we cannot be perfectionists to the core because we don't know when this trend will change, and we have to keep moving in faith as the trend gets worse and participate at every level. That's the only thing we can do. When you look back at your best investments, I'm sure you will realize that you simply kept buying and at some point the selling stopped or the buying gained momentum and the price turned. After that, you never got an opportunity to participate. This will happen in this cycle also. It will happen in every cycle. So as an investor, it's important that you participate when this selling increases. There are a lot of people who had massive FOMO last year. To those investors, here is this opportunity for you to not miss out. So participate and make sure that you buy the best Indian businesses and give them space in your investment portfolio when those investments are going to be thrown away by global investors and by a section of domestic investors who simply cannot take the pressure of falling markets for extended periods of time. This market is going to present a pressure cooker situation for us. It's going to be intense. It is going to be very, very difficult to endure, and it is going to be a market where the winners will significantly outperform the rest of the market. As an investor, as an advisor, as a manager, it's very important that each of us understand what we are playing against. Understand that this is not something that's going to end in a week or two or a month. Understand that we are in it for the long haul and be ready to invest patiently and to wait with endurance and with a sense of conviction. That is the need of the hour, and the coming weeks are going to present to all of us the opportunity of a lifetime to invest in the best of Indian businesses and to remain invested in a phase when the country comes out of this phase of inflation to get back to what it always wants for all of us, growth. So the phase of inflation, when it moves down, when it is about to end, opens up an opportunity for growth, and it's important that we are well positioned to capitalize on that growth when it gains momentum. The investing has to happen during this phase of inflation and not necessarily after the growth has begun, because the best values are available and are going to be on offer and we can pick them up when we want. It's important we should not miss out when these opportunities are before us. Thank you for watching this video and happy investing.